Hey everyone, can you hear me? Am I too soft, too loud? Is everyone okay? Today's okay. Thanks, Dave, for the confirmation. All right. Time is. Oh, thanks, everyone. Thanks, everyone. All right. Today is the second, our third session. Market seems very interesting this week. Okay, so it's 8. Let us start officially. So welcome back to the third session of Trade Smarter, Not Harder. It's about TA session, as you all have been following us. So joined by me, we have Ying, he's right beside me. So we'll talk about the advanced indicator today. So let us move forward. Okay, so once again, the series content, week 1, week 2, if you guys have not actually seen or joined us, you can view it in YouTube. So YouTube has our recording. Both is already up. Yeah, by this week, I think the second video is already out. So you guys can check it out. It's under PhillipCapital account. Okay. So today we're gonna talk about advanced indicator, and next week I think it'll be also interesting where we talk more about trading psychology, which is actually most of the portion, I would guess, in a trade. How you take loss, how you set your stop loss, take profit. So all these are quite important. It's not just about, you read now above support, below resistance. You still need to know where to put your stop loss and how you guys personally trade. Okay, so next week will be interesting as well. But this week, let us talk about advanced indicator. It's not too advanced, but I think it's we classify it as advanced because it's slightly more than the what we have learned last week. So a quick summary for last week. We have volumes. We talk about moving average as well, simple and exponential. We also talk about ATR. So you guys not too sure, you can catch us at the recording last week. If you guys are still unsure about what's going on, please hit up in a Q&A today. We will answer them accordingly. So, and I think I want to address it. I put there under, you see this, the importance of week 1. So that is very important. The support resistance. If you guys still not sure what support resistance, catch our 2 previous recording as well. We talk about the support resistance and we emphasize on it because it's so important. Okay. So let us jumpstart to the session. So today we're going to talk about RSI and moving average, convergence, divergence, and of course Fibonacci. So all these are quite we use this quite often, at least for myself. I do use them. And then there are some of these, we're going to share about what they are, especially the Fibonacci retracement and why they are so accurate and why we use them. Okay, so without further ado, let me have Ying to talk about RSI to you guys, and over to you, Ying.
Okay, very good evening, everyone. Okay, so we classify advanced indicators, right? It's not saying that it's going to be very difficult to understand or anything, okay? It's just our way of just putting it, because previous week we were doing more of like you just using EMAs and volume, just straightforward, you can just see the data, okay? But for RSI and also MACD, right, for today's session, you require a little bit more understanding, okay, because you basically need to look at the price action itself, you need to look at the indicators, then also you need to find your own confluence. Okay, so RSI basically is relative strength index. Okay, it's a momentum indicator. It's an oscillator lah. Basically, you will see later we will show you on the chart. Okay, so you will see basically a line that is moving up and down. All right, so what they indicate, right, is you can see that it's either overbought or oversold. Okay, so you see from the slide, right, default setting for RSI is 30-70. Okay, this is the default. Then of course you have this middle line which is at 50. Okay, but one thing to note, okay, for RSI, usually is used to you can find trend, okay, but for example, if you are on an uptrend, right, because RSI is bounded, okay, bounded meaning to say is 0 to 100, okay, the range. So when your default is 30-70, right, once the price starts to move uptrend, okay, you will have this portion where your RSI is always at overbought when the price just keep continuing their uptrend. Okay, so you will face an issue that, wow, this thing just keep overbought, but then the price is still pushing higher. Okay, so one way to mitigate this, right, is actually when price is in an uptrend, for example, okay, you will set your RSI below. I mean, you won't just use this default setting. Okay, you will shift it maybe to a 2060. All right, so basically you shift 10 downwards so that you give more room at the top portion to the upper bound. Okay, otherwise you will forever just keep looking that the uptrend is just keep basically it's just keep having overbought lah, basically. Okay, because with RSI, once you see overbought, it's basically telling you, okay, market is now basically it's just a lot of people are buying, right? Then slowly you might be looking at the short side. Okay, then for oversold, you will basically be looking for the movement upwards. When once they pass the 50 line, then you look for the buy. Okay, so slightly more confusing, but later we will look into the charts to illustrate better on this. Okay, but simplicity's sake, right, is basically RSI is just telling you the momentum. Okay, how price has been moving for the past few days, basically. Okay, then I will share my understanding on RSI, MACD, and Fibo first. Okay, then later I will let Xiong share his, because for these three indicators, I think Xiong uses them a lot. Okay, so our understanding on, and also what we look out for, right, it might be different. Okay. So for example, how a RSI will look, right? You just look at the most bottom area. Okay, so basically what's happening is you have your bound of 30 and 70. Okay, so all these levels that are above the purple zone, okay, basically they are overbought areas. Okay, so with overbought areas, right, you need to look at how, I mean, the day itself, where is the price moving. But generally, once you have overbought areas, right, once they cut back down into the bounded area, okay, usually they might be looking at more of a bearish movement. Okay, for overbought. Then for oversold is the opposite side, basically. Okay, so as you can see from this illustration, not as clear yet. Okay, later we will show you with trading view itself. Okay, but basically, the general idea of using RSI, right, is you have overbought, you wait for the line to cut across the 50 line. Okay, the 50 line is basically this dotted line right in the middle. Okay, once you see the RSI line cut below, okay, then that's where you look for your bearish, basically your short for this case. Okay, then if you have a price that is at, I mean the RSI that is at oversold area, okay, once they start moving above this 50, then you look for the buy signal. Okay, so with that being said, it's not that you, I mean, okay lah, I never use just solely on RSI to find a trigger before. Okay, but of course I use RSI with MACD. Okay, then also some with support and resistance. You know, those simple chart reading. Okay, but generally, I don't think indicators you can just use solely on one indicator because it's a lagging. Basically they are lagging. Okay, so if you don't have a confluence from another indicator or whatever you see, right, can be just candlesticks itself as well. Okay, you might just be faked out. I mean, basically you might get faked out of the position. Okay, because it's lagging. You need the candle to be printed before the data is out. Okay. So next one is MACD. MACD basically is the long form or moving average convergence divergence. Okay, so same thing, is a momentum indicator. Okay, price oscillators. Okay, so same thing, is basically you put two EMA together, right, and they run. Okay, so this 26 EMA and 12 EMA okay, is the EMA that they put in the MACD. Okay, but more complicated. I mean, the MACD itself, right, is not just using these two EMA. Okay, so what they do is they have this they call it MACD line. Okay, MACD line is basically the difference of 26 EMA and EMA, the 12 EMA. Okay, then after that they will have one 9 EMA to show the difference of these two line together. Okay, I mean the theory part of it is quite confusing lah. Okay, but generally MACD itself, basically they show you momentum. Okay, so what we are looking out for, you later, okay, wait, let me just show you the MACD indicator first. Okay, right at the bottom you see, okay, you have two lines. Okay, then after that you have this histogram. Okay, all this basically like volume like that, right? All the candles, not candles are like bars. Okay, like all these thing over here, the histogram. Okay, so what happened is in MACD, what we are looking out for is convergence and divergence. Meaning to say, you have two lines running, right? Okay, the 26 is basically the yellow line that you see here is basically your 26. Okay, then the blue is your MACD line. So what you want to do, if you are using MACD, right, is when the shorter line, shorter length, okay, cut below the longer length. Okay, so it's in a way is similar to how you can use EMA on the chart itself. Okay, but this one is just that the EMA is printed on the MACD indicator. Okay, so for example, if we are looking at bottom left, the MACD indicator, you look at slightly to the left side, right? You have this blue line was trending upwards with price moving higher. Okay, subsequently they cut below the yellow line around like over here lah. I'm not sure if you can see my mouse cursor over here. Okay, so once price starts to cut, right, then okay, you will start to have your sell trigger, sorry, not trigger, but sell signal. Okay, like indicating that okay, the EMA is slowly changing, meaning to say your momentum is shifting. Okay, then you see all this histogram below, right? So what it indicates is when the difference is zero, so means these two lines are sticking to each other, right? There's no divergence, no convergence, basically they are on each other. You will have your histogram itself is basically zero, okay? Because this histogram is the difference between these two lines. Okay, so if the line is very far apart, right, you will have histogram that is very huge. Okay, also meaning to say you have more momentum in the price action itself. Okay, so the simpler way of using it is basically you just wait for the shorter length to cut the longer length. Okay, then to get more confirmation, you wait for your histogram to print bullish at least 3 candles. Okay, at least that's what I see lah. Okay, so that's one way. But of course, later I will, Xiong will share his thoughts on this. Okay, but generally MACD is you just having a EMA, you just having 2 EMA on an indicator itself. All right, and it's not on the chart, as in not on the price chart lah. Okay, and the last one I want to share, we want to share Fibonacci retracement. Okay, and Fibonacci retracement is one thing, there's also extension. Okay, so retracement is how we plot the current swing low and swing high, right? Then extension is after you have your area of second swing low, how are you looking for your next target, which is the extension of the Fibonacci? Okay, so this Fibo, the name like quite difficult to read lah, also like some Italian or that kind of thing. But Fibo, in short, Fibo, right, is basically it came about from this mathematician. Okay, he used like 2 random numbers to put together, add together, then you get the third number, stuff like that lah. Okay, so that's the theory part of it. But what he came up with is this golden ratio. Okay, so basically there's 4 numbers on the Fibo lah. Later we will take a look also. Okay, we have 4 numbers, 0.238, then after that you got 0.3328, I think. Then after that you got 0.618, and something like that. Okay, so basically you have 4 numbers of this golden ratio. Okay, but one thing to take note okay, it's not proven, say real, it's not proven by any research or even test like back testing, right, that why the number works. Okay, like really there's no explanation why these Fibo numbers, right, this golden ratio actually acts as a support or resistance. Okay, because like we mentioned here, the retracement level indicates whether we can find support, resistance. Okay, but the truth is, right, there's no studies or back testing, like there's no results that really show or explanation in a sense that why these numbers are acting the way they are. Okay, so the few numbers that really make sense, right, is 38.2, 50, 61.8. Okay, basically these 3 numbers is what, if let's say you are using Fibo, right, generally you'll be looking at these 3 numbers for retracement. Then of course extension you will be looking at 1.68, sorry, 1.168, sorry, 1.618, sorry. Yeah, so it's slightly different, but this 0.618, right, is always appearing. Okay, which there's no proof lah. Like really, I mean, you find online, right? Or they will say, okay, this is how you use a Fibo to work, to make it work. But there's no explanation why the number is how it is. Okay. But what I mean, I've been like trying to figure out, right? So one assumption is that, okay, because everyone know that Fibo is going to work according to these numbers, okay, from back then. So everyone is just paying attention to these numbers. So at the level of these numbers, right, they will have a lot more orders because people are just paying attention to it. Okay, you get what I mean? Yeah, it's basically, that's why it becomes like a support or resistance. Okay, it's just that you have to plot based on the chart itself. Okay, then Fibo retracement, the Fibo itself, okay, basically is more useful when the market is trending. Okay, it's almost impossible to draw a Fibo on a range because you need a swing low, you need a swing high, okay, for uptrend. I mean, to have at least a Fibo appearing lah, okay. So if the chart or the price is moving in a range bound area, right, like sideways, you basically your swing high, swing low, right, all the levels are getting taken away already. So this Fibo is not working in a sense that basically you don't have any retracement, okay. So Fibo usually we will use for trending market, okay. You spot your swing low, your swing high, then you find areas of rejection for retracements. Okay, so I think this example here is we are looking at I mean the last leg of this downtrend. Okay, so what we are trying to understand, right, is okay whether price will reject at 0.618 because we took a swing high, okay, then a swing low, then you see how price actually just ignore this whole area, right, and run through. Okay, so that's why the thing is about this Fibo is you have to think of it in a sense that it's like any other support and resistance. Okay, you cannot, or even any other indicators. Okay, because you cannot just take a Fibo and just use Fibo alone. Okay, because when price starts to come to this 0.618, 50, 0.382, right, these kind of levels, right, you don't know how price is going to react. Okay, you cannot just trigger straight up because basically it's a huge area from 0.382 to 0.618. This area here is damn huge. Okay, but of course, another chain of thought is okay lah, as long as I put my stop loss at the swing high or swing low, technically you are quite safe, right? Yeah, but you don't have to do that because you can add in your own confluence, okay? Either using like candlesticks, which is price action. You can use trend line to find confluence. You can use support and resistance to see if your support and resistance that you draw on the chart, right, whether is it in line with the Fibo itself, the levels. Okay, so that's my thought on Fibo lah. Okay, then also another thing is Fibo, right? You, like I explained before with trend line, is depends on how far you want to look at or how near you want to look at. Your swing low and swing high might differ. Okay, because you might be taking a very major swing, okay, but then in nearer term, like intraday, right, swing portion, you might just have this short area where it might look like a swing to you. Okay, so that's one tricky part when using Fibo, because everyone, when it comes to drawing Fibo, right, it's very different. Okay, I don't think there's any identical like two people, right, will draw. Okay, maybe it's close enough, but then the way they look at the swing high or swing low might be different. Okay, so basically this session is we just want to share on these three. Okay, so now I will pass my time over to Xiong to share his experience on these three indicators. Okay, because currently he's still using them lah, so I think he will be more he will be more experienced to speak about these three. All right, Xiong, over to you.
Hey, thanks, Ying. So I think as what Ying mentioned, so all these advanced indicators, right, we are just going through the flow. So we need to mention that all these indicators you cannot rely solely on just one of them. Okay, so usually it's a mix. So like RSI, MACD, and sometimes you want to bring up Fibonacci, you bring it up. So you never try to use one indicator. You don't look at the chart and then you say, okay, RSI tell me this, and then you're just going to use RSI alone. Okay, so usually it's a mix because alone they are, I mean, you need to know that indicators are mostly lagging. So only when the data prints out and then they register, they show you the next movement of the indicators. So you need all these indicators such that the way that all of them give you certainty or higher possibility that to enter the trade. So we're gonna show you after when we are doing the charting but now let me talk more about each of these indicators. So moving on to the RSI. So RSI, I still uses them. So it is something I like, basically momentum indicator. So if you look at RSI and MACD, both are momentum. So yeah, I just got a thing for momentum. But then RSI, as what Ying already mentioned, so this basically tells you it's overbought or oversold, and that alone it doesn't give you a very accurate indication, because even if it hits the overbought condition, you think like, hey, overbought already then don't want to enter. But this indicator can still maintain at the overbought line. Okay, so does it mean that you don't have to enter the trade? That's where other indicators will tell you something else. It doesn't usually have to fall just solely on RSI. If not, it keeps being in the overbought, then you don't need to buy already, right? Because it's overbought. Then oversold, you don't need to sell already, right? So you need to know some other indicators, and of course our default structure is your support resistance levels. You need to know this, which will actually assist you in analyzing your charts. So once again, default setting for RSI is 3070. And then some people feel that the chart is moving too fast or something. They'll set it at 2080. So this can be another line. Then if things move too slow, then it just shortens, whichever it may be. So we are just going through all these indicators for you to understand them, and then different counters, different volatility will have a different reaction with all these indicators. So it depends on how you use it. So once again, you all need to look at charts a lot to actually understand what you are using, if this RSI is actually suited for this chart. So basically RSI is whatever the formula you see there. Basically it's just looking at the previous candles, I would say. So if you minus it out, if they have previous day going a lot of green candles closing, then of course the RSI will be higher. Okay. So we will go through this in charting. I will show you RSI and MACD, how I use them together. So we'll talk about that in charting. So I'll just go through this. Next. Okay, so look at this chart. I thought Ying mentioned quite well. So if you look at the uptrending, you'll see that once again RSI is not solely, you can't rely solely on RSI, because not if stay in the overbought, you're gonna miss a lot of opportunity, right? So but it gives you a very good picture whereby when it's near undersold, right, you have the opportunity to buy it. So that's one thing. So just once again, solely on RSI, it's not enough. You need something else, which is usually MACD. Then they will help you identify the trend. So we're gonna do it on the live charting later. Okay. So if you guys don't understand RSI, do let us know in the chat, the Q&A below. We'll take the questions at the end of the session. We'll answer them. Okay. Okay. Next we have MACD. Once again, momentum indicator. I love to use momentum for some reason. But just need to say momentum. I mean, most of them are lagging once again. Then moving average, right, is basically just two EMA basically the 26 minus 12, then you'll get it. So this one is by default. You can still use other numbers. It doesn't have to be the 26 and 12, but by default it's 26 and 12. You can use 10, 5, you can use 25, whichever is convenient for you. But we'll show you how it's used and how we're going to use it. So stay tuned for charting later. And once again, if you look at this alone MACD, it's going to be lagging. You go and look at all the charts, it's still lagging. So what it means lagging is only when the price move really, then your indicator react. So you are missing that small beats. That means maybe you enter, it's already done with the bullish trend. So but MACD itself, it gives you a very clear picture. Like what Ying mentioned. Once it crosses, usually once it crosses the two EMA crosses, so usually the shorter, which is basically the 12, crosses the 26, going up, so it will be a buying opportunity. That's But then some other people also use the convergence divergence method, which I think it's up to personal preference. So I'm not gonna shut it down. It's up to you to, if it works for you, if it helps you, then go for it. But I'm still learning the convergence divergence. I feel that certain charts I don't actually get to apply, but which we will look at it later. So next, Fibonacci. And Fibonacci retracement and extension. Once again, it is no assurance or evidence, like it's not concrete that confirm. But in a way, in a chart that doesn't have a lot of information, maybe some new IPO chart, you're like, hey, cannot see the levels and stuff, where to exit. This Fibonacci gives you a very imaginary level, right, for you to put your stop loss or take profit level. So that's what I like about it, because not all the charts have 5 years or 3 years, such that you can reference from previous year, or they don't even have 1 year. Maybe those IPO that just came out this year, then you're like, hey, missing so many datas. How are you gonna set your levels? When you know your support resistance? So this kind of give you a certain possibility of where the lines will be, the levels will be, but it's not a guarantee, okay? But it's quite accurate, I would say. Okay. So this is something. Once again, not everyone draw the charts like that. I'm just drawing these because it's not a very nice Fibonacci, by the way. But then you can see that it's an assumption to move forward. You're not sure where the take profit level. So usually they'll take it at the 0.61, because if you look at the Nasdaq, right, as of now, if you cut off the last few bits, you don't actually know if it's going up or down. But looking at the historical data, it's a downtrend. So where you want to exit is usually people put it at a 0.618, that level. Then people take profit, and then once they take, then they'll see how the movement trend. If there's no reaction, then for short-term trader, they'll enter it again and then buy more. And then the cycle continues. Okay? So I hope you guys understand or take away something from this. If you guys do not understand, please throw in a Q&A. We will answer them accordingly. So I just want to say, to clarify, I think a lot of people mistake that this is going to be like how we're going to draw the charts using how we trade every day. But we are just going to show you all the indicators, because all this what I do will probably not apply for you. If it works for you, fine. But you guys need to, because you must understand the trading psychology there plays a part. If I give you my method, do you know where to take profit, where to stop loss? It's going to be different, because at the end of the day, it depends. Like you see, hey, market going down already, I'm going to take loss today. But for me, maybe I'll see like, hey, I think still got hope. I will wait another day and see how it goes. So it's how you guys you must understand how you trade. I mean, I think most of you have been trading a lot in this market already, in the market already. So you guys need to understand your personal feelings, how you guys play a part. I mean, how your mind plays during uncertainty, because all these are possibilities to actually take profit or stop loss. So okay, let us without further ado jump right straight to the next segment. Okay, so I will share with you guys sorry, I will just share. So if you guys can give me a random counter, that would be great, because I am just shoot any counters so that I can see any random counters. Okay, so I'll just maybe touch one. I thought Xiaomi was interesting. We talked about it last week. Sorry, wrong Xiaomi. So we talked about last week, someone asked me, and then I was there, I don't really know. I keep saying I don't really know this counter, and I really don't know. So we talked about it about here. Sorry, last week was what? Yeah, about here, somewhere this portion where I drew a resistance line, and then I said I wasn't sure. I was talking about volume and then the divergence of the volume. So if you guys not too sure, check it out in the recording. So what I mean is, once again, I'm not 100% clear that it's going to move like that. But on hindsight, now the chart has already printed out. So during then, I am uncertain because I wasn't sure about the company. And then I that was the first time looking at Xiaomi after so long. So now looking at it, what I can tell you from my experience last week is that it's not 100% thing. But as long as you got uncertainty, you're not too sure where this counter is going, don't enter lah. Correct? Cannot be you like, hey, this one confirm go up. So during last week, I wasn't certain. I could, if you check out the recording, I was damn unsure. I drew the resistance line right here. I told you that there was a divergence in the volume, that likely there's gonna be a turnaround of the chart of this Xiaomi. And then now we see it printed out. So once again, I was about 70%, that saying like I'm quite unsure. I mean, I'm quite certain it will turn around, but then I'm not too sure. That means it may still go up lah. Okay, in the case that it goes up, then I'm wrong lah. But then the thing is, I didn't place any trade here, so I'm safe. But if I'm going to enter here and I'm unsure that I got analysis that okay, this is likely gonna turn, and there's a possibility that it's not gonna go up all the way, I wouldn't enter the trade. Okay, so now you see that this is actually based on psychology really. Okay. Yep. So I just want to show you guys Xiaomi. Let me take a Broadcom. Okay, let's do AVGO. Let's AVGO. Is it this? Yes, it's Broadcom. Okay, so let's take a look. Okay, so what usually what I'll do is we will of course go back to the first session. Your support resistance line very important. So how I'll draw this is I will draw it this way. So I think Ying later he will do up another chart for you guys depending on which one. So you're just going to show you how he does the chart. But I think he usually does it without the other indicators lah. But for me, I like to see other indicators because I'm always uncertain about myself. But I want you guys to have this habit of having a trade journal, because as you trade, you will understand yourself better. Always have this trade journal. You place your trade, you sell them, take note of when you sell, how you feel during that period you sell. So this is once again all gonna be next week's topic, but I'm just gonna share with you. If you guys gonna enter a trade, exit the trade, put down the remarks, how you guys are feeling, why you guys take the trade to exit. So all these are very important. Okay. So once again, this is how I'll draw my chart as of now. Very basic. I don't really know what Broadcom. I mean, how the P&L is doing actually. So this is how I'm gonna take the trade. Usually, so okay, you see, the RSI is already telling you something. It's at the overbought section. But if you look at RSI alone, you're not gonna take the trade, right? Because it's so high already. Okay. Okay, so one way people will look at this is they'll draw this going uptrend. Once again, your RSI also going uptrend. Cannot draw. Okay, you see that your RSI is also going uptrend, and then you see your MACD also going uptrend. So it's likely gonna move up. Okay, it's gonna move up furthermore. Then what do you need to take note? You need to take note at where your resistance. This one tricky already. This one, okay. So now we will execute the Fibonacci retracement and the retracement. Oh, sorry, extension. Extension. So how we will do this for myself, it varies from people to people. Okay, so usually I'll draw this way. It's going uptrend. So it is assume it's likely gonna hit a resistance somewhere here, which is where this is at okay. So this is how I'm usually gonna draw it, but I think Ying gonna draw it different as well. So it depends on how you guys see it. So for myself, I'm looking at this level. It is hopefully what I want to look at this chart and how I want it to react is I want it to range at this level. I don't want it to fall below, because once it falls below, you know that your support level at that is not very strong. Okay. So what I'll do if I don't have a position right now, I will still wait. I'll still wait from here. I think pre-market is going up. Market has been in the uptrend, which is a good sign. So I want the Broadcom to actually break past this level. But of course, once again, RSI is showing you that this is overbought. So should you still enter? This is up to you. Okay. Because if you look at the RSI, your downward side is actually quite a lot, because this is already overbought. But I think I'm looking at the I think this is the default level. This 70-30 lah. Okay. Then you see your MACD still going up higher, not anywhere near converging. So likely this broad is still gonna trend upwards for quite a while. And then of course, you don't see any levels lah. But then what you will do is, based on Fibonacci, the next level. So all these are your different levels, your imaginary levels, because they don't have historical data lah. That's why you are using this. But then again, it's not very accurate, but it gives you this imaginary line that you can follow. So what I want Broadcom to do is to stay above this line, and then once it breaks out, then I probably will enter and then exit at this the 2.618 level. That is my imaginary level, because that's the resistance line that I'm looking at. Okay, so this is just a very small example of how I'll do my trades. Once again, I encourage you guys to have a trade journal to understand what you're feeling during then, why you enter the trade, you saw opportunity, if you exit the trade, was it a loss, was it a profit? All this will be on trading psychology. Okay, so I'll hand over my time to Ying to show you guys how he will do his trade on a different counter maybe. So in Q&A, throw us the counter that you wish and we'll take a look. Okay, over to Ying.
All right, okay. So we just look at other counters lah. Okay, so I will just go through the Q&A first. Okay, I see a few questions coming in already. Okay, one question asking, there are leading indicators beside lagging ones. Okay, since this will be technically the last webinar we're talking about indicators, right? Then leading ones, right? The first one that straight off my head, okay, is basically like macro data. Okay, CPI, PPI, FOMC. That one data-wise is definitely leading indicators. Okay, it is not indicator on a chart for technical analysis. Okay, but then macro itself will push price. So in a way, it's still a leading indicator for me. Okay, otherwise there's Ichimoku cloud. Then after that, you have Fibonacci. Fibonacci is considered indicator. Leading indicator. But something to note is I will show you lah. I mean, you will have levels out, right? But basically, at different levels that you're looking for triggers, right? You are anticipating that a rejection will be seen. Okay, unless you have all other confluence on it. Okay, otherwise, Fibo itself, firstly, yes, they are leading because you already have the levels out showing where's your 0.618, your 0.5, 0.382, basically. Okay, then basically I would take it as these two lah. I mean, other indicators, most of them are really lagging. Okay, not really lagging lah, but basically they will wait for candle to print. Okay, then which one would you pick if you use them at all? Okay, I personally don't use any. Okay, but if I have to, then definitely I will use Fibo. Okay, because firstly, like if you know that my trades are basically based on supply and demand, right? So with Fibo, it's basically just giving me more assurance on my support and resistance, or my supply and demand levels again. Okay, using golden ratios, like the numbers lah, to justify that. Okay, I can find a confluence with me what I'm doing, then I'm comfortable using it. Okay, but if we are going to talk about like Ichimoku, right, which uses like price, volume, momentum, all the data coming into one indicator, to be very frank, I cannot make sense of it lah, basically. Okay, I cannot find my setup if I want to play. I mean, if I want to use Ichimoku cloud as an indicator for myself. Okay, so yeah, but Ichimoku itself is leading lah, because you have a cloud, then you have some explanation or interpretation for what you want to see there. Okay, so if you want more of this Ichimoku, right, I think Zane, he does his TA on Monday with using quite a bit of Ichimoku. Okay, so maybe you can ask him like, okay, what will he look out for? Okay, the common one is golden cross, death cross. That's all I know. Okay, but looking forward, Ichimoku is a leading, but I won't use it lah. Okay, so personally, I will be looking more on Fibo if I were to use. Okay, then another question: will MACD give the same interpretation result when price charting is by month, day, 30-minute, 50-minute? Okay, the interpretation will be different. Okay, because your MACD line basically is 26 EMA and 12 EMA, right? So also another thing that you need to understand firstly, when you talk about different time frames, right, from monthly to daily to 30 to 15, right, usually a trend reversal will start from M1, like first minute or at the tick, okay, by the ticks. So by the time your lower time frame, which is anything below that H4 or D1, right, they might be already starting this uptrend already. Okay, lower time frame uptrend, okay, the minor one. Okay, but your overall, right, maybe you're looking at month or weekly or daily, right, you might probably still not see anything because they might just be a rejection only, okay, on the day itself. Okay, so if you are looking at MACD alone, different time frames will give you different result. Okay, but of course that's why you need to ask yourself first. If you are looking at all these time frames, right, and you are using MACD as an indicator for your triggers, right, then you need to understand that are you having more significance on the higher time frame or the lower time frame? What are you trying to do? That one you need to ask yourself first, because the chart itself, your lower time frame and higher time frame, right, is not always going to run uptrend. Like lower time frame is uptrend, higher time frame is uptrend. It's not going to run that way every time. Okay, so you need to understand like what's that few time frame you are using okay, but usually unless you are looking for weekly all the way down to M1, right, then you are trying to find that trend reversal, finding confirmation for something. Otherwise, generally you will just be using at most 3 time frames. Okay, one up, then your trigger, and one down. That's it. Then you look for your confluence from there. Okay, then okay, also one question. Let's see. Parabolic movement of price, is it not so valid? It is not so valid, is it so? Okay, for this parabolic movement of price, I take it as is you are talking about impulse moves, right? Like where the price basically just keep rallying or dropping, right? Is that the question? So when you have this kind of sharp movements, I call it impulse movements. Okay. When you have movements like these, right, usually your indicator might fail you for the day. It's a fact, okay, because impulse move itself, generally indicator what you want to see, okay, very clean, okay, like okay, you're running quite consistently in a certain way, minus away all these impulse move where it gives you very sharp movement, then it becomes a way where your indicator might tell you that this movement itself is a fake movement, okay, which is very dangerous also because if you don't have the confluence, then you will start to think that okay, this maybe that you have this impulse move coming in, right? Then you get into the mindset that thinking, okay, all the uptrend they have been running, they give you one impulse down move. I mean, your indicator will tell you that oh, it's time to go for a short already because this thing already dropped already. Okay, but if you neglect the idea that okay, maybe they are still having a demand below, or maybe you put other confluence of a trend line, okay, this drop itself is just might be a very small reversal back downwards only, okay, basically to get more orders to push higher, right? So just based on using indicator itself, it might just give you a false information in a way, okay, for if you are just looking at one day. Yeah. Then hang on, I think we still have a few more. Okay, this one I think is in general, it's just like for TA. Okay, this is just for TA question. When do we use daily or weekly charts? Okay, very good question because everyone has different. I think firstly, right, you need to understand what kind of personality, like trading personality you have, okay? Because I think I mentioned it a few times already. If you are going to invest, right, you are just going to buy into a counter and hold it out. Of course, firstly, you need to make sure that they have strong books, okay? Their fundamentals are strong. Then at least that gives you an assurance that you can hold it out for at least the next few years. Okay, so with that, yes, you can use monthly or use weekly, or maybe lowest is a daily chart. But if you are going to swing, tell me you're going to swing 1 month, 3 months, okay? Then okay, you can still use a weekly chart as well. Because weekly itself will still show you the major trend. Okay, your market cycle will still be showing quite nicely on your weekly chart. Okay, then with that, you can pinpoint whether the trend is still going higher or going down. Okay, then you go down into your daily and maybe H4. All right. But if you are telling me you intraday, okay, you want to trade intraday, okay, you sit down when market open, you just want to hit and run, get out. I mean, you won't even use, sorry, you can use weekly and daily also, but you cannot just use any of these two, okay? Because if you just use weekly, you cannot see anything. You don't know where to trigger it, nothing. Yes, you can find your weekly demand or supply or whatever confluence you can find, okay? But your stop loss is going to be damn wide because it's based on a weekly, based on a weekly range. Okay, so last week I shared on average true range. If you are looking at your average true range on a weekly chart and you are trying to trade on a daily, like intraday, then your stop loss and your profit taking, right, will never be, I mean, it will never make sense. Okay, because your SL, your stop loss will just be very far away now because you're basing it off a weekly chart and you're finding a trigger on the intraday basis, right, which will mean you are going into lower time frame. Okay, so I think firstly you need to pinpoint like what's your personality lah. Do you have to work in the day? Do you have to work at night? You know, stuff like that. Then with that, then at least you know, okay, how much time do I have to watch the market? What time can I watch the market? Okay, because when you are playing just opening, let's say you want to trade, for example, if you are just looking at opening session, right, the trade that you're going to take is very different from if you want to trade like maybe from like 12 a.m. to 2 a.m. Okay, you are missing the opening session, you don't have as much volatility. Not saying that price will move, you still have FOMC coming out, right? Like data coming in. So you need to understand like how much time do you have in the market to look at the chart, like what kind of risk can you take and how are you going to play. So this one we will go more in depth next week, but I just roughly let you know in TA, your time frame will make a difference based on how you basically how you want to make money out of the market. Okay, you cannot just use a weekly on an intraday trade. You can pinpoint levels or trend, but not to take a trigger. Okay, can RSI go together with stochastic oscillator or one can only choose one of each? Okay, to be very frank, okay, this question, I repeat the question. Can RSI, okay, relative strength index, go together with stochastic oscillators, or one can only choose one of which? Actually, say real, you want to put a lot of the same oscillators right together is fine. But the thing is, just you need to find one indicator or oscillators that you feel comfortable looking at least you understand, right? Then you don't get confused like, why my RSI talking about this, then why my MACD talking about different thing? Okay, because basically RSI and MACD is just momentum oscillators as well, right? They are all taking price data as the primary data for the plotting. So firstly, you need to understand well, understand well that indicator that you are going to use, whether you are comfortable looking at it. Okay, because I think I say a lot of times also you don't want to plot too many indicators in, right? Then after that, every indicator just giving you conflicting confluence, then you will just be very confused. Then you really have no idea what you're doing. Then it's always a vicious cycle one, because nowadays we can always find information so readily online, right? There's a lot of indicators out there that, I mean, you just put in, you can try already, right? But don't come to a point where, wow, you put everything already, right? Then you don't even know what you're looking for. Okay. Yeah, so I hope that answers your question. Whether can use together, yes, you can. You don't need to just solely choose one. Okay, then now I just go back to our today's session. Okay, I'll just show TSM since got people talking about TSM. Have or not? Don't have. I see wrong. Wait. Okay, have. Okay, let's just talk about TSM first. Then I throw in, I'll throw in RSI and MACD first, okay? Because Fibo, I will do solely on Fibo without indicators, okay? Just Fibo, but I will show you the variance between using trend line with Fibo, using support and resistance with Fibo, using candlesticks with Fibo. Okay, so basically, all this I will just put into it, everything and package to you for the Fibo. Okay, so for indicators, I will just show RSI and MACD. Okay, so every time before you start, you open your indicator already, right? Just make sure that the data is taking the correct stuff. Okay, so your MA setting change to EMA. Okay, 14 to okay. Okay, all this must take note lah, because it might make that slight difference. Okay, I don't know how much difference it will make, but it will still make a slight difference. So you just, I mean, all this is within our control, right? We try to be as as close as we can. Okay, so with two indicators, let's talk about it lah. Okay, same thing. Trading view, every time my own habit is alternate R, which you reset the chart to your 9 months to 10 months data. Okay, so we are just looking at the very current situation for now. All right, so RSI, what are we looking at? You see, let me get a paintbrush. Okay, RSI, we know that, you see, from here we have an oversold area, okay, which is over at this point. But the problem is, right, when you have oversold, by right, yes, you oversold already. That's technically like a buy signal that, okay, maybe it's time to look for buy, because your bottom bound, right, is basically just left at few bits. So once you have oversold, right, slowly the price will just start moving back as a reversal. I'm not saying that they move back, they will straight away go all the way. Okay, they might just continue this downtrend also. But what I'm trying to explain to you is oversold area or overbought area, right, usually will indicate to you it might be time that we might see a rejection at least. Okay, so for example, for all these areas. Okay, so we just pinpoint overbought, oversold. Okay, so your RSI basically over here also, you see overbought areas, like this whole area is overbought areas, then price start to trend over. Okay, but your confirmation of a trigger, right? I mean, there's a few chain of thoughts lah, like how people trigger. Some like to see, okay, overbought. Yes, we identify overbought. So, for example, we take this overbought over here. Okay, you see this guy here. Some chain of thought is, okay, we know that it's overbought. Okay, we know that price is moving higher. What we want to do is we wait for a confirm close of this RSI, right, going lower. Okay, then they will find a trigger based on the candle itself. Okay, so for in this case, you see, if you're just using RSI, you have an overbought over here, showing you that, okay, price just went above the previous level, overbought, okay, then price starts coming down below this overbought area, right? Wow, if you trigger here, you more or less, you get trapped over here already. Okay, you get what I mean? Okay, but not saying that always over. Why? Because we take a look at this overbought over here, this area. Okay, the area that they start trading lower from the RSI, right, is at this area. So if you have stood over here, you probably might still be safe because your SL, your stop loss will probably be higher over here. Okay, so it's I mean, your RSI is basically showing you the same thing. Okay, the slight difference is, yes, even on RSI itself, right, you can use those candlesticks pattern to slot into your RSI understanding. Okay, because basically all these RSI levels, right, they are just price data moving in line chart. Okay, so you from the chart itself, right, you can find like, oh, is there higher high, higher low? Okay, all this is really still inside one. Okay, not saying that, oh, this is indicator, I don't need to find all this. Yes, it's indicator, but you can still find, okay, you have a level, okay, price still going higher high, then you see whether is there a convergence that, okay, your chart itself, your price movement itself is still moving higher high, higher lows. Okay, so for example, later some of the area, right, later I show you, let me just get this line better. Okay, for example, like you have a uptrend, right, then as long as your price is still moving uptrend, yes, you are still running this area, you are still having this convergence area, then you, okay, sorry, I draw too far lah. Okay, I stop here, because you basically, this point here is until this point, okay, so you need to pinpoint accordingly the points. Subsequent, we start to see, okay, price start to slow down, then price starts to create a downwards movement in your RSI. Okay, your overbought level drop. So if you plot this line from here, right, to here, okay, by right here is going higher, but then your RSI is already dropping already, so you have a divergence, right? So when you are using RSI and MACD, right, you are always looking for divergence in either using the line itself and find based on the price data, okay, or you just use based off the RSI alone. Okay, because you don't need to draw all these lines, right? Like, oh, you know that there's a divergence, then yes, that's why price going to shift. Why? Because price going higher, but RSI not supporting, means volume not supporting, means you don't have volume, you don't have momentum, then price starts to drop. Okay, I mean, all this is the backstory lah. But if you're just looking at RSI alone, yes, you can still pinpoint. Why? Because you know that you have overbought area over here. Okay, price starts to go back down into your bounded area, which is around this guy over here. Okay, but it's still not safe to take a trigger because you don't have a confirmation that really price is going down, because you don't want a case like just now like that also, right? Just now over here we see already price RSI came down, then after that price continued to go higher first. Okay, so you want to pinpoint, then can. Okay, you wait for the RSI to really go past this 50 level mark. Okay, this 50 level is basically this dotted line in the middle. Okay, it's just the mark telling you that upper bound is the buy area, lower bound is the sell area. Not sell area per se lah, but it's just that, okay, they are seeing that more volatility or momentum is coming down from the area. So you give yourself more assurance that, okay, I know that it's overbought, price starts to move downwards already and they start moving past this 50, right? Then it's safer for you to get a confirmation to get a trigger. Okay, but if you want to put all these things into the picture again, just using RSI, right? Then it will just be the same thing that I showed you just now. You have, firstly, you have an uptrend, which you indicate with the price itself. Subsequently, you know that RSI is coming down, but then your price still trying to make one last leg of up move. Okay, this last leg of up move already shifted your RSI. It's still in the overbought if you are looking at my mouse. Okay, it's still overbought. You see over here, it's still overbought. But then you have from this area here, right? Okay, wait. From this area, this first high to your second high, your price is moving higher, but then your RSI overbought indicator, right, is moving lower. Okay, so you have this divergence, then you know, okay, need to watch out already. Why? Because by right, for price to keep moving higher and higher, you always want to have more volume coming in or momentum pushing it. Okay, but they are not showing that. They are not showing it lah. Okay, so if you are basing it off indicators alone, RSI alone, then you know that, okay, if I'm in, then I probably need to watch out a bit. Okay, then if you are really in the long already, right, your first indication that you might want to get out is, okay, maybe at the first break back into the bounded area. Otherwise, you wait for the smash. I mean, you wait for the break of this 50 point, which is around here already. So it really depends on how you want to look at it. But the simple way is you same thing, you find double top, double bottom, head and shoulder. All these also can find one. Okay, like now I'm talking about this area, but now we shift lah. Okay, since we are just talking about RSI, right? First, RSI first. Later I show you how to make the conversions. You see over here, oversold. Okay, which is over here, very clear. Okay, so this movement coming into this area, right? We know that initially we have a downtrend, okay, on your RSI. Basically, a downtrend very quite obvious, all the way lah. You know that initially, not initially, like over here, right? You almost came into an oversold area. Price stop here, price start to move, then continue the downward movement. Okay. So at this current oversold area, you see, the first oversold came over here, this small candle. The next oversold came over here. Okay, we have lower price movement. Okay, a lower low, but the oversold level is basically equal lah. Okay, it's basically equal. If you, I don't know if I can zoom until you can see lah. Okay, I zoom all the way. It's basically one straight line lah. They are equal level. So meaning to say it's the same story. If I want the price to keep going down, then they better continue deeper into the oversold. Okay, it's the same as the overbought. Okay, that's why I say RSI one problem because it's bounded. You only until 100 or 0. Okay, so if you overbought during the uptrend, they just keep hitting 100 already, right? Then forever you will see divergence. Why? Because they cannot go higher, then you will just see they go up, then they stuck there, then they come down, right? Because they cannot go up already, then they continue to try again, maximum 100 already. So that's the problem. That's why when you are having uptrend, then you need to shift your bounded area lower, okay, so that you can have more room for the overbought to run. Okay, this is just one way to look at it. Okay, so back to this area here, we have oversold, price start to move. At this point, can we buy? We cannot. Why? No confirmation. We don't know what to do. Whether price will suddenly come back down again. Okay, the only time is when they cross the 50 mark, which is over here, you look for your buy. Okay, which is indicated on the RSI. This is a simple way to look at it. Okay, then if let's say you still don't know whether to do anything, okay, then you need to see, okay, here we got a downtrend. Okay, subsequently we know that price starts to have an equal closing. We might see a divergence. Price from here start to run uptrend first. Okay, this is the first part. Yes, running uptrend with the RSI. Yes, okay, we are having a convergence. Okay, they are still running nicely accordingly lah. Okay, subsequently we are seeing a down move. Okay, same thing. We are still seeing a down move on RSI. Okay, what's interesting you need to know is when they come down this area, right? Because basically they are still stuck over here, okay, not close to the oversold, not close to 50. You don't know what to do. Can they, when they close 50, cross the 50, can you buy? Cannot, because by right you need overbought into 50 or oversold into 50. Otherwise, there's nothing for you to do. Okay, but one way is from here to here you plot, you know that okay, you have a higher low. Okay, then you see based on convergence of your RSI. But can it give you a confluence to buy? Answer is no lah. Okay, you cannot just use this to do lah. Okay, but solely because this is on RSI and MACD, right? So now, okay, with this scenario, right, we look into MACD. I don't know if it's confusing lah. Okay, y'all, if you have any question, please ask, or need to slow down or what, please ask. Okay, because I will just speak at my own pace first for now. Okay, so we are looking at this area. We have a lower high low. Sorry, we have a low high higher low. Okay, so with price data itself, they are still showing the convergence. So we are still looking at price. Okay, maybe they might still go higher. Maybe we don't know because they don't have a oversold coming back into 50. We cannot have a confirmation yet. Okay, so that's where if you are using RSI and MACD, right, then you know, okay, I'm using MACD also. Then why not? I just look at MACD indicator as well. Okay, because you basically it's here already lah. Okay, I just use one more thing to tell you only. Okay, so firstly, MACD, what we want to see, whether your histogram, whether is it getting bigger or getting smaller, how big they are. Okay, because basically that's the momentum, right? How wide are the price movement, right, away from the previous one. Okay, so this difference in histogram, right, we know that you have price coming down already. You see this area, I just need to circle this area. We have price coming down already. Okay, we have, yes, histogram getting bigger. Okay, but then technically is, if you compare to the previous bull movement, technically it's nothing to shout about lah. Okay, it's just meh, it's just small. Okay, but this alone don't give you the confirmation or confluence to buy. Okay, because the confluence will only come when you see over here. I don't know if you can see. I zoom all the way first. I try. Sorry, this one. Okay, I don't know how I can drag this thing for you to see. Okay, now I think y'all can see, right? Y'all just look at this MACD first, solely on this MACD. You have your shorter period, which is the blue color line, crossing back above your longer length EMA. Okay, so with this, can you buy? You cannot buy here also. You need to wait for at least 3 histogram. Then you start to think, okay, is it time to go? Then you start looking at your RSI. Okay, you start looking at your RSI, then you say, okay, it's in line, because why RSI is still moving higher? You are still having this confirmation that price might continue back towards this overbought area. With price coming back, I mean, sorry, I still need to throw this in again. Okay, your support and resistance, price coming back to your support and resistance. That's why, which is why we are seeing price very close to overbought. Can they sustain here? I don't know. We need to see how market going to close today. Okay, but with all this data from your indicators, right, then you can slowly pinpoint whether you want to find a trigger. Okay, it's not just straight up like you just look at it, right, then wow, you just go for it. You cannot. Maybe at times can. That's why it really depends on like what kind of strategy you are really using. Okay, because the thing is, right, one indicator alone, there's a lot of ways of really looking at it. Like I explained to you, you see, you can find all these patterns, like candlestick, sorry, not candlestick. You can find up, double bottom, triple bottom, head and shoulder, cup and handle, everything on the RSI alone. Then you see whether got confluence to the chart, the price action. Okay, that's one way to use. Otherwise, you just look at the line, whether they can cross overbought 50 undersold. That's it. Okay, or you find whether they got market cycle, whether they are going the same structure of your price action itself. Okay, so there's a lot of ways that you can use to see, but if you want to put everything together to see, also can. Okay, but I still, if let's say you use all these to pinpoint your RSI, what is telling you, right? You also cannot just base it off this to take a trigger. Okay, then that's where your other indicator can come in. It might not be MACD. Okay, it can be stochastic, it can be parabolic, it can be I mean, I don't know lah. There's a few others we can just click indicators, right? Then there's a lot you see, there's a lot. Okay, then all the there's a lot I mean, too many. I never used before. Okay, to be very frank, I only use all the very common one. Okay, more popular one like when I started out, right? So I just use all this that is easier to try to understand. Okay, so MACD, same thing. Basically, you look, it's like a trading with EMA. Okay, you just wait for your levels crossing your shorter length, crossing your longer length. Okay, then another way, MACD also work when you start looking for divergence and convergence, which is when the EMA is going higher, right? But you better make sure that your price is going higher. Then when they start, okay, this one not a good example. I need to find a like okay, like over here, you know, here you see your MACD is showing this thing, right? You know the close is equal, but then on actual fact, right, the price itself is actually moving higher. Okay, so with this, right, you might know that okay, maybe the price is starting to come lower first before they try again. But then with MACD alone, you cannot pinpoint that, okay, how far are they going to come down? How much are they going to come down? You also cannot pinpoint when are they going to come down. Okay, because it's only when they start, okay, maybe they start crossing, then you start looking, okay, maybe they might come because you have a straight line on your MACD. Because by right, when price is going higher, MACD should follow. Why? Because it's a momentum oscillator. It should follow the same structure. Okay, this is what I'm trying to say. So if your structure is not the same, it might mean something is going to change in the shorter term. Okay. So this is just one chart. I mean I can pull another chart out, then we talk about RSI and MACD again. Or you all want me to talk about what? I look through the Q&A first. Okay, you think about it. I see what you want me to explain. You want me to continue RSI MACD or sorry, later still got Fibo. Okay. The next one, still need RSI and MACD or not? Still want me to talk about it? Anything? Anyone? Okay, one question. MACD, why must change the number of days and EMA? Oh, no, Jane. The MACD, right? As long as you see is EMA, number of days is you change is based on this one is really you need to backtest yourself. I cannot give you a certain number that it's like it work for you. Okay, because for example, I don't know if you're here before this dragon indicator lah. Okay, maybe the name is not dragon, but it's along the line. Okay, it's basically a self-made. Okay, it's not really self-made, it's just using 3 EMA. Okay, but then the timing, right, is based on the trader alone, right? He's comfortable looking at this period. So I can just tell you the number lah. Is basically I think got 7, 14, and there's a 22 or 23. I cannot remember the last one. But basically it's number that is not the same as the common one. Okay, because common is same is 5, 8, 13, 21 or 20. Okay, then all these numbers are like how far you want to use, right? It's really based on how you want to pick your counters, what counters you are looking at, what market you are looking at. Okay, because when it comes to indicator, right, it's not the same as just pure price action already. Okay, indicator some movement very slow, right? Then you will see your MACD is always okay. Not your MACD, your RSI, you will forever be in the bounded area one. You won't see a overbought oversold. Almost never. Okay, because if they are moving slowly, they are still stuck in the area, or if, let's say there's no volume, no activity, then they will just get stuck. So the number of days you need to pinpoint, but RSI, you can just change to EMA lah. Okay. So far you mentioned convergence, more of RSI divergence. What about MACD divergence does? Okay. Okay, this question, the question is asking, okay, because I talk about RSI, there's this divergence and convergence. Okay. MACD divergence, convergence. Okay, this divergence and convergence, right, basically means the same thing. Okay, meaning to say when the price data, right, price itself is moving higher. Okay, but your indicator lines these EMA lines are moving lower. Okay, it's basically they are moving the opposite direction. Like for your price itself, you see that okay, they are making a uptrend. For example, there's high, low, higher, high, higher, low. Okay, but your EMA itself, they are showing. Okay, all these are EMAs, just saying, your RSI, MACD, all these lines here are just EMAs. Your EMA is showing high, low, lower high, lower low. Okay, so you have basically it's not matching. You have a price going higher, but your indicator is telling you that, okay, this thing is coming down. Okay, so this is a divergence where the price itself that they are moving, right, might not really be sustainable because your indicator might already tell you that, okay, maybe there's no momentum already, that's why your thing will shift, right? So when I say, when I using RSI, right, and I talk about, okay, convergence, divergence, right, basically it means the same thing. It's just whether are they in line with the price itself that moving in the same direction. Okay. Okay, then now, okay, since there's no other questions, I will go into Fibo. Okay, I will just show Fibo first. Then anything, just throw in the Q&A. Okay, someone asking this, so I will just give it to you. This one not counter review. So I see the chart like that. For this one daily. Okay. So Fibo, you see, Fibo 9 months I show like that, right? What can I do? Technically the only thing I can do, right, is I know my swing low is here based on today's data. My swing high is here. Correct? Are they in a trend? They are not in a trend because they are okay. Maybe they are in a small trend, okay, like because of this gap down, right? But generally, if I'm just looking at the data right now, they are just moving from a range area. Okay, so if we are looking at Fibo, one example, you see, why I plot this as swing low, I don't need to care past data for now first, because what I have now, right, is I know all these swing low, swing high already formed already. This is the lower swing already. I mean, it don't make sense for me to put here when I know that this is the lower swing, right? So if me, I personally, when I look at it, I want to draw my Fibo, I will take my swing high. Why this one as a swing high? Because it's the last point where they go already. Okay, but of course there's preference that people will draw from here. You get what I mean? Okay, but if you get from here, right, meaning to say, right, you need to draw from the previous level because this thing is technically still running uptrend first. Okay, initially they are running uptrend. Okay, and if you have your Fibo line, your swing high here and your swing low here, right? Okay, wait, let me just flip the thing. Because initially it's an uptrend. You have your swing low, ultimately your swing high. Okay. Also, that's why you see when this thing is plotted, right, you look to your right side is how price starts to move at 0.5, 0.618, and 0.382. Okay, basically these three prices are where they will start running. Okay. So when we start moving the Fibo, because the current data is just here, right? You have to pinpoint that this downtrend itself, okay, this downtrend, one thing to note, okay, this trading view Fibo, I'm not sure why you need to draw it upside down, okay, because by right, downtrend you just draw from swing high to swing low, okay, but trading view, if you are using trading view, your Fibo, don't get confused, you need to draw for a downtrend, you need to draw from swing low to a swing high, okay, later you all try, you all should know, you should understand what I'm trying to say, okay. So will I pinpoint this guy as a uptrend or downtrend first, right? Firstly, I will not. If we are talking about now, right? Basically, they already gap down. We know that price push up and bearish, right? Technically, they already make a lower low, okay? They are moving towards the downside already. Even if I draw trend line based on last time, right? Price is already broken already. Okay, trend line broke, now sustaining below the trend line, okay? You know that it's bearish, price has to go. Okay, so the problem comes here. We have 38.2. Like I say, there's only three numbers you need to take note. These three only. 38.2, 0.5, 0.618. Okay. 0.618 show a bit of rejection, nothing happened. Okay. 0.5 a bit, 0.382 finally show rejection. Okay. So my problem when it comes to Fibo, right, is because if I'm using Fibo alone, I cannot know, I wouldn't know whether I can trigger from here. That's the thing. Okay, but I mean, of course, if you don't risk as much, right? Okay, there's two ways to look at it. Okay, one way is you place a limit at 618, 0.5, these three level you place, right? Then your SL, your stop loss put above the swing high. That's one way. I mean, there's people that are really doing it because they just need the level to any of the level to reject, right? They make profit already. Why? Because your extension, right? How it works is once you have this Fibo level rejection, right? As long your first target is will be always be at 1. Okay, it's only when they start breaking this 1 level, right? They breach below the previous swing low, right? The swing low that you draw, right? Then you will start finding your new level, which is 1.68, 1.618. You get what I mean? Okay. So in a way, this level here, there's no confirmation. It's just golden ratio. Okay. There's no studies that saying that, oh yeah, why all these three level hold. Even 0.5, right, say real is not in Fibo. This 0.5 is just a number that come out because a lot of people just find that 0.5 works. It's not a Fibo number, this 0.5. Okay, but it's just there. Okay, then these three number become the golden number people looking at. These three numbers are. Okay, but is there any studies that show that why this number work? No. Okay, it's just basically happened. Okay, but that's why I don't feel comfortable just using Fibo alone to find trigger in a way. Okay, but in a way, since we are already drawing already, right? Fibo showing me 382, but can I pinpoint like, okay, what can I do now, right? So same thing, I will just do back what I like to do, okay? I know that trend line broken. We are looking at a downtrend in the short term, okay? We have new low, new lower low, new lower high. This guy, okay, now we don't know whether he will continue, but generally it's still lower high because of this guy, okay? So with that being said, what I will want to do, if I want to find confluence, right? I find my previous levels, okay? Then it will be back at the same story of me finding my support and resistance. Because reason being, all these support and resistance is how I will do when price moving higher, whether they can find support or resistance in the level, then whether price starts to hold back above all these levels. Okay, so if they don't, then Fibo already tell me that okay, price already cannot hold any level. Then I just look back into this Fibo. Where are my levels exactly on the Fibo? Okay, then those levels that got level one, those Fibo numbers that got level one, right? Then I will pay more attention to it. Okay, so I mean, you can ask me now, 0.618 and 0.5 basically in the middle got one box, then how? Right? Then you wait for confirmation, or you cannot just straight up from here go, ma. Right? I mean, when the price was coming in like that, I mean, it's not wise to go and put a limit over here for a short. Right? It's better that you wait for rejection like today. Maybe now their pre-market is opening 1225. Sorry, 122.55, right? Which is slightly higher than yesterday's close. So if they cannot hold this level, they will probably come down and you can trigger from your 618 already. Right? But otherwise, there's no confluence. Okay, so the problem with me, I don't want to say the indicator problem. The problem is me. Okay, I don't know how to make it work. I see Fibo, yes, Fibo very nice. Help me pinpoint levels. Help me find support and resistance. But the problem is, I don't know how to draw the levels, right? Because it's okay, say wrong lah. It's not like I don't know. I know how to draw my way. Okay, everyone got different way of drawing Fibo lines. That one is a fact. Okay, like I explained already, like from here I also can draw Fibo. Okay, I take swing high, I take swing low. Yeah, this is my Fibo. Does it make sense? Wow, okay what? 0.5, 0.382. Wow, okay what? Right, still holding ma. Yeah, I can do this also. Or I zoom even further. I say okay, my swing high last time was here. Right, then previously the swing high was here lah, slightly lower. Then you see, what? 0.382 rejection. What? 0.5 reject, 0.68. 618 reject, yes, it reject. Well, all this hindsight, why do I care about hindsight whether it happened or not? Right. But the problem now is at the current point, how am I going to draw? Okay, so the problem is me lah. I don't know how to pinpoint properly the Fibo, but I know Fibo works. Okay, I just like draw for you last time data, right? More or less you know that okay, yeah, we are seeing price rejecting at levels that supposed to make sense lah. Okay, supposed to make sense. Right. But if I come back to here, then problem again, where do I draw? Okay, proper swing high, swing low is proper lah. This is proper lah. Okay, this is the proper uptrend swing high, swing low. But then we know that now already smashed to the downtrend already, right? They already gapped down already. I cannot fake myself and say, oh yeah, this 3.82 will hold. It's already gone already. It's already gone. Yeah, back then maybe you see uptrend withdraw already, 0.5 rejection, 0.382 rejection. Yeah, all looking nice, all fine. Right, 618, okay, close enough, still rejecting. But at the current point, I cannot take this guy already. I cannot take this swing low already because I know that price already slammed the whole Fibo. And it might possibly go even further. Okay, so with that, Fibo, I mean, this is how I look at it lah. Okay, but okay, wait, I just see Q&A first. If you all want, I can put one more example out lah. Okay. Can you show us how to choose where to place the Fibo charts since there are so many places? Oh, yes. Thanks for the question. The question is how to place Fibo chart. Okay, like place the Fibo lines, retracement. Yeah, like I explained to you, right? Okay, we find a nicer chart first. Okay, this one I don't want to. Okay, it's not nice. Okay, but this gap down really changed a lot of things. Okay, like the Fibo already gone. You have nothing to really pinpoint. And Fibo is better used when you have a trending market. Okay, so let me think of something that is trending for very long. Apple Apple trend like quite a while already, right? Wait, wow, this one very messy. Wait, I delete first. Okay, Apple, like if we want to draw Fibo, right? Your initial area, your swing high is confirmed here. Okay, initial area. Your swing low is here. If we are looking at very long, okay, then this is how you're going to draw your Fibo. That's it. Okay, because you know that, okay, yes, here downtrend, yeah, a short period of downtrend, but are we affected by it? No. Why? Because current price already go higher already, ma. What we are more concerned is whether come back to one will get rejected. That's all. Okay, so you can drop Apple this way, but of course, if you are looking slightly before, let's say you are looking, we are just looking on the most right side for this Apple. Okay, let's say you are looking, wow, might start a downtrend. Okay, then you need to take note. So same thing, your 6.18, 0.618, right, might still be a rejection, which is showing. Okay, then whether they can go deeper, that one I don't know, because if you don't have a confluence, you cannot tell as well. Okay, so confluence only got, I mean, with Fibo that works really well is your trend line, your support resistance, and also candlesticks patterns. Basically, you find candlesticks with strong confirmation. Okay, then another way to look at it, right? Okay, since we are now on this side, you also can find this guy as a swing low. Then you find this guy as your swing high again from the wrong side. You have this guy as your swing high, because at this point we don't know, price is really coming downwards, Wait, wrong side. This guy price is coming downwards, right? So we draw from bottom to the top. Okay, like that. Back at this point, we don't know whether they will continue, but generally lower time frame, you are still looking at this downtrend, right? So some people might draw it this way first, because it's not wrong also. You got a swing high, yeah, you got a swing low, and you are making series of lower low, lower highs. There's nothing wrong to draw your Fibo like that. Okay, that's why I also come back to my own problem, that what is a good place to really draw your Fibo? Does Fibo only work on a really, like, I really need to zoom until then far, like, wow, this is really an uptrend. Okay, then I will tell, or if it's not going to work for me in the down, like a shorter period, right, then maybe need to go into lower time frame. Okay, that one I never researched enough. Okay, to be very frank. But generally, right, Fibo works, but you need to know your levels. So I think if you are playing like a swing for a longer period of time, I think it's easier to really pinpoint. Okay. Then also the problem is this. Yeah, with that being said, this whole uptrend, right? I just need to say it's not that I know Fibo very well but I just want to say something. We have all these Apple uptrend okay, but I'm pretty sure previously, right, your Fibo is looking like a downtrend right? We can see that there's a high here, we have a swing low here, we have still lower high, we have a lower low, right? So initially our Fibo is looking like this, right? Before all this movement start coming in. So we might be looking at movement at 618.5, 0.328, 382, sorry. Correct. Then is at what point do I switch my Fibo to find something nicer? That one, I cannot give you a straight answer. Okay. Do I use it? I don't. Okay. But if I need to use it, will I use it? I will. I will use Fibo instead of every other indicator, because at least it's closest to what I feel comfortable using. Okay. Like I explained, if you have all these all these numbers basically meant level to me. Okay. They are just levels now. So I just need to go and see whether is it confluence to what I will draw also. Then that's it right? Like if I go Apple, I'm going to draw like that because previously was a level that they broke below. Then now giving me confluence that this is my 0.382, then I will start finding like price action over here. So it will work as a confluence for me. Okay. Okay. Wait, how about using Fibo in poems? Any difference between it and trading view? Okay, I think the only difference is how we draw it. The numbers, right, won't change because it's always the Fibo is just the formula for Fibo is just like this. The numbers won't change. Okay, it's just maybe for poems, right? I need to check for you. I need to see it again. Okay, because different like web, right, or different platform, right, they will have different way to draw. Like for example, if generally is you swing low to swing high for uptrend, right, you will draw from down to up. Okay, meaning to say you will click your bottom first, your swing low, then you drag up. Okay, but this way is wrong. Why? Because for Fibo, your below extension cannot be I already drawing a uptrend, then below extension cannot be. Okay, so that's why I realized the trading view Fibo is the opposite direction, which you need to draw from your swing high to swing low for uptrend. Okay, so that one take note. Then for others, it's usually from basically following the trend you just draw up the trend, like drawing a trend line like that Okay, but trading view slightly different, just need to take note. One more question. Fibo indicator, where is it? It's not really an indicator. It's you can find from the side, if you all don't know where to see, right? Your toolbar from the left, okay, you see this Fib retracement. There's a lot of retracement kind I got all these I don't know okay. There's wedge, got spiral, circle, fan, all these I don't know all these are new retracement and extension. Extension I don't need to care because it's part of the retracement already. Okay, they will just plot for you your 1.618. Okay, so retracement Fibonacci is I don't know whether is it considered an indicator, okay, but I just place it as an indicator because it just basically help us draw the levels based on where we pinpoint. Okay, one more question. Do I use stochastic? I don't. Xiong, do you use?
Used to.
Oh, Xiong used to. Hang on, I pass the time over to Xiong. Thank you very much, everyone.
Hey, thanks, Ying. All right, I think the Q. Okay. Sorry, guys, let me do my share screen. I think, okay, we got a few very interesting question. Am I? Okay. I thought I was on mute. Okay, but yeah, I thought we had a few very interesting question. Stochastic. So it depends on individual on how you use these indicators. Once again, before I touch on that, I thought the Fibo was very interesting. So if you look at how I drew my Fibo just now was way different from how Ying drew. And why is this so? Why like, hey, why different people draw different style? It depends on what time frame you're looking at. So personally, I do day. I mean, Ying also does day lah. But then, how long are we gonna hold on to the stocks is another thing. Okay, so that's another factor. So there's a lot of factor you need to factor in. So it's not there's no rule of thumb like, hey, I draw this next week you can sell it different. Okay, so you need to test it out yourself. Okay, we're here to equip you with all the tools, and then you need to test it on the chart yourself. So the Fibo just now I drew was way different from how Ying drew, but Ying was looking at a bigger picture. For me, I think I was doing Broadcom just now. So I was looking at a very shorter term. I drew something like, if I drew something like that. Yeah, I drew something like that. That's why you see the two red lines resistant there. So this is a very, very short term way of how I would draw it lah. So it's way different from how Ying drew. Ying drew so different people once again, can draw from here. This is the low, and then they can draw it this. So you see the different levels, and then it sort of maintain above the different levels, and it continue upwards lah. Okay, so you need to go and test it out yourself. For me, this way works for me very well. So I know my imaginary lines, imaginary resistance up. Okay, but then from what I'm seeing here now, Broadcom is actually moving up higher lah. So once again, I need it to maintain above the resistance level. So let me touch on the question. I think someone was asking stochastic. So do I use them? Yes, I do lah previously. Then I realized it's very different. If it works for you, it works for you. Okay. It's not like I'm gonna say RSI is better, but I think RSI works for me better. RSI works for me in terms of trending market. So two of these indicators, they are used differently. You need to know that first. If not, you need to understand what's the difference of these two. One is RSI itself is very good in the trending market. So as it trends, RSI shows a clearer picture. Then your stochastic is more towards the sideways movement. So as it's ranging, so you need to get this clear first. But then both is gonna work. If it works for you, it works for you. Okay, I'm not gonna convince you to come RSI or use stochastic, whichever you are comfortable. So yeah, none is better. Whichever works for you, whichever help you profit, go ahead and use it. But then we are just showing out the default. So for those who are not too sure, these are something. This is just the default way of how we're doing stuff, lah. Okay. It's not so okay. I think once again, can you guys throw any random counters so that I can just do a quick analysis or step by step on the different counters. Give me a random counter. Okay. Sorry, Amazon. So don't talk about Amazon. Okay. No charts. Okay, no charts. You see, one thing, the first thing, you feel like entering a trade, what do you look out for? you need to make sure that the company profiting lah. Don't go and buy those going go bankrupt. Me like wow, cheap. Go and buy more. Okay. That's go and look out. The financial side is still very important. Okay. Don't just rely unless you are doing commodities, forex. So this FA is not really in place lah. But for company, especially stocks, you need to know that the company is doing well. So you invest what? Invest something that won't exist in 5 years' time. You need to know that the company is doing well. So that's number one. Okay, that's the number one thing you need to look out for. And then secondly is if I don't really know, how can I do? Okay, so I give you guys a tip. If you look at any counters, like maybe Amazon, I don't really. So okay, I got one. I think I drew something here. But anyway, let's clear this. So let's say I do not know what Amazon is doing. What I need to look out for, go and check the earnings. Okay, this is a very quick and rough example. It's not the most accurate because some of these estimate and earnings are different, but it gives you a rough idea. Okay, so you just look at the earnings. Are they earning or not? Are they profiting or not? So basically green is surprise, then the red is the miss lah. But miss doesn't mean it is losing money. Okay, miss means you see they are earning money. It's just that they sort of miss the target lah. Okay, so you need to look out for this. So let me do a quick example. Okay, so I know the revenue side is earning, revenue side is growing. Okay, yeah, you see, so with a very short quick example, I know that the revenue is earning. Okay, just from this alone. I'm not jumping straight to Yahoo, take out the financial chart stuff. Just looking at this quick from TradingView. Okay, so in terms of revenue, it is earning. You see, 20 billion expected for the fourth quarter, which is your Christmas period. So of course, January Christmas period, stock's gonna do well, and it's likely gonna rally judging from this. So let's see. Okay, estimate is this. Okay, so basically everything is higher for next quarter. Then okay, I think it's something I will look at, something I will jump into lah. But okay, so how do we what do we do next? We got this chart, we got RSI, we got MACD. What are we gonna do? Okay, I think first is back to basic. We emphasize your support resistance is gonna be very, very important. Okay, depending on how you guys draw. So I will usually draw it this way. Okay, I'll draw it this way. And then okay, support level wise, we have a few lah. But whichever you guys are comfortable with. So okay, I'll draw the nearest one. Then you guys need to understand how many days are you gonna hold this? Are you gonna hold it for a month, 2 months, 3 months, 6 years? So the term that if you guys are swing traders, if you guys are short-term trader, you need to know how long you're gonna hold for. So usually each earnings is about a quarter lah. So you see the difference. So once it announced earnings, you can see that from this earning, last quarter earning until the next quarter, right? It already went up. What does this mean? It means that they are pricing in the forward guidance. Okay. For those you are not sure. So what it means is the 20 billion, right? Because usually during announcement, they will announce and then they'll tell you the forward guidance, which is your next earnings that they are expected. And then you suddenly see this, wow, ready. Wow, it's gonna go up. So what is this? This is basically means that investor, they are pricing it. They are like they know that Amazon is gonna earn based on their forward guidance, and that usually Amazon will hit lah. But I think quite a bit of misses lah. So you need to be clear that are they gonna meet the next expectation? Especially it's Christmas, and then we have got high interest rate. So then after that, you will realize that okay, this is something I want to enter. Then you go and look at TA. What are you gonna look at? You're gonna look at entry point and exit point. You're gonna see where you wanna enter, take profit, and then exit. So are you gonna, today, wow, I see the price like that. I want to buy, just buy lah. You may be buying at the highest, you may be buying at the lowest. But then let us take a look at the TA portion lah, okay, for you to jump in. So okay, you see, I draw the resistance line right clear. Yeah, you can see that this range is likely gonna reject. But then of course, what we want is we want Amazon to break this resistance or either stay above lah. Okay, but I think pre-market is slightly down. And then it seems like it is going to be a downtrend. But okay, we look at other indicators first. We just don't solely look at this. Okay, so RSI wise, it is going down like this. If you look at this, okay, we draw from here. So I think one of you asked, right, how do you spot? So this is something I'll look out for. Then you see that the price is coming, is not right, it's not right. The RSI wise, it is slightly going down. It went up and then it didn't hit the overbought, but then it's near the overbought. Should you still go in? It's me, like unlikely lah. I would wait until at least for the RSI to come down. Okay, but this doesn't mean that RSI confirm will come down lah. Okay, it may stay above 50, it may continue to trend up. But then if it trend up, I want it to break the resistance. Okay, then let us take a look at our MACD. So our MACD is saying what? MACD seems to be going up. Okay, this thing seems to be going up a bit. You'll be like, confused. The uptrend going up, RSI coming down, MACD going up. So it's what? 2:1. Then got 3 indicators down there, confused. This is where a lot of people get stuck. This is where like, very confusing. Got more indicator. Then should I jump in now, or should I like which indicator is telling me the right thing? That's why we emphasize like don't have too many indicators. Okay, go with those indicators that you're comfortable with, that have you have been using them for quite a bit. So go and try look at more charts. Then you understand that this indicator worked for me. Okay. So a general movement is that okay. So I'm looking at the MACD right now. It seems like it's gonna the short term is gonna hit the longer term. So the 12 is gonna hit 26 lah. But I think you can change this day. Okay, maybe I'll change it to how I would like it lah. Okay. Let's do a 5 and 20. Okay, this is much clearer. Okay, so for me, usually I would like to use 5 and 20. Why? It shows me the week and month lah. As simple as that. Okay, so you see that it actually touches lah. So do I still enter the trade? For myself, unlikely. I would not, because it's not very clear yet lah. Okay, the MACD doesn't give you a very clear indication yet. Currently, it's still at the first. I think the first candle. Okay, so the print here is actually the first histogram lah. So it's very I'm very uncertain about this trade. Would I enter? No, I will not. Okay, as clear as that. This is how you can spot the trade you see. First thing is you identify the stock. You know that Amazon. I like Amazon. I want to take Amazon, but is it time to enter? Okay, now you are pinpointing at the time of entry that you want. Okay. Then is it the time of entry that I want to go in right now? I can tell you no, this is not the time of entry that I want to take for Amazon. I need a clearer picture. Okay, everything seems to not be looking right for my way. Why? Because the MACD is converging. I need more data, but it's converging. RSI is at a high coming down, so I know that it's diverging from the trend line. So as simple as this, it's showing me that it's likely gonna come down, but then what's my next move? Okay, so I'll give you a simple next move. Maybe just looking at the trend line now. Okay, what I want Amazon to do is to stay above this trend line. Okay, I don't want it to break below the trend line. Then after that, I will take a look at this counter again once it's after a period. Of course, currently it's not very clear. So I will take a look at this same Amazon again, maybe next week. And then we can see, is it time? Is it the right time that using TA, is it the right time to enter the stock? So I hope this helped you guys at least give you a clearer picture of how we use RSI and MACD. If you got any other questions, please throw it in the Q&A as well. So I thought some other question was quite interesting. Yes, the time frame, which time frame do we use? Up to individual. If you guys are trading, swing trading, doing days, week, try to look at the bigger picture lah. Like if you are doing weekly, monthly, look at day or week. At least it gives you a broader picture of how the trend is moving about. Okay. Then if you guys are trading the day, look at 1 hour, 2 hours. So once again, this one very subjective. Go and see how you guys have been trading, and then you guys use it on the chart itself lah. Okay. Try not to look at weekly, monthly, then you guys are doing intraday trading. Okay, it kind of don't make sense, but I hope it's clear for you guys. So once again, got any question, just hit us up. If not, this is for my charting. I hope this example give you guys something to bring back lah, at least for this session. If not, I'll hand my time over to Ying to tell you guys more. So okay, Ying, over to you.
All right, thank you, Xiong. Okay, any more other questions or not? Otherwise, I think for RSI MACD Fibo, more or less that's what we want to share lah. Okay, but I also want to highlight is I mean our stuff, right? Like our trading strategy, like how we trade, right? Is firstly, I just want to clarify firstly, I'm not a technical analyst. Okay, I'm doing my CMT and all, but I'm not a technical analyst. I trade to make money. So whatever I use, right, it can seem very simple. Like this is supply and demand, right? Very simple, or nothing, just boxes and lines. I think I say many times already. Okay. But the difference is I trade, I don't teach. Okay. So I mean, of course I teach what I trade lah, basically my own supply and demand. But if you want more indicators, right, I'm sorry, like I think we try our best to give you what we try to use before and also what we understood before lah. Okay. It might not be the full package because there's a lot more. I mean, out there's many more other people that are using these indicators that can really make it happen, make it work. Okay. But personally, I'm not going to change to try to use other indicator and not trade the way I'm comfortable with. Right. So firstly, I think apologize that I mean my trading style a bit boring, right? Nothing much, nothing to fluff about, but that's how I make my money lah, basically lah. Okay. So because today is our last indicator, okay, I'm not really indicator, it's just like our last webinar that we're going to talk about indicators. Okay, moving forward, I'm not sure whether we will pull this out again. Okay, if you're interested in supply and demand, let me know, but I won't do it as a webinar. Okay, I can give it to you personally, but I won't do it as a webinar. Okay, yeah, so if you want to know how I trade step by step using supply and demand, you can just let me know also. Or if you want to learn how to trade from Xiong, RSI, MACD, that one you can talk to him as well. Okay, but in terms of webinar wise, right, I think these 4 weeks plus next week included, right, will probably be that's it for this workshop lah, basically. Okay, then in the future whether we will come up with more stuff, that one I'm not sure. Okay, we will see what we can do, but I think because I mean, okay lah, I mean all the while, right, I mean Xiao and I, we have been doing like TA webinars, right? All the webinar, I understand that we are just talking about the same things. Okay, because really that's how we trade lah. Because like I say, I trade, I'm not a technical analyst. Okay, so if you want to have a lot more information, like all the TA, like really TA stuff, okay, maybe you can speak to Zain as well. Okay, he's our technical analyst. Okay, I'm pretty sure that he know more of the chart than me, but in terms of trading, that one is a different story lah. Okay, so it depends whether you want to trade or you want to look at chart lah. But I mean, both is fine as well, right? Just okay lah. I just want to share on that because, yeah lor. I think that's all I want to say lah. But y'all got any questions or not? Otherwise, next week I think it's just trading psychology. Okay. Trading psychology, I think is mainly we can share more on our maybe a bit of our strategy, maybe why we come up with how we trade, then what are some ways that we trade, what are some ways that we improve our trading, what are some ways that we are basically still in trading lah, basically lah, like why are we doing intraday, or why are we not investing, or why are we not touching like other markets, stuff like that. There's a lot of things like this. But I think with that, right, I will next session we will really talk about more on the psychological aspect of it. Okay. It might be very different for many people, okay, but I think the general idea of this trading psychology, right, okay, is basically everyone feels, I mean, everyone will have this fear and greed and fear, right? I think that's quite common, especially when we are putting our hard-earned money into the market. Then with so much uncertainty, then you will always feel fearful, and fearful is one thing, okay? You scared you miss out on a trade. Wow, you think very hard. Oh, indicators, your confluence all hit already. You want to take a trade, you don't take. You fear of missing out, you went early the next time. Okay, then it might not turn out the way you want. Okay, you feel that what you go in already, then you lose money. Right. Then why do you even go in the first place when you feel that you have that kind of fear? Okay. But so it's not that it's going to be the same for everyone. Okay, I mean, for next week, it's more likely to share on our experiences. Okay, then how we improve, how we look at it, how we back test our stuff, how we tweak, what kind of habits we have when it comes to trading, stuff like that. So it's more of a experience kind of thing lah. Okay, because I think all those like you want to find very theory one, right? Online you can find already trading psychology, behavioral finance, this kind of thing, these kind of topics has been very I mean it's very readily available online. So I don't want to just go through the textbook kind of topic lah. I just want to share more on like experience, right? Like it can be like how basically what we do lah, how we look at it and how we play, like how we play the market lah. Okay. Okay, wait, let me just look at some of the Q&A as well. Okay, for intraday trader, only can use RSI, MACD, Fibo, or any indicators recommend. Okay, for this, say real, even if you intraday, right, there's a lot of indicators you can use on. You can use volume, you can use EMA, SMA, you can use Bollinger Band. There's a lot. It's not just basically every indicator there, right? It should work for every time frame. The only problem is you need to go and tweak your time period. Basically, like EMA, you intraday, right? Okay, maybe you're looking at what H1, like 1 hourly chart and 30-minute chart, for example. Let me just show it to you since we are here. Like hourly chart and 30-minute chart. Okay, so how many candles are you? I say what EMA are you going to use? I think this one you need to pinpoint lah. Okay, because every like for example like 1 hour chart, right, you basically have 24 candles in a day. Okay, but then for equities you probably have what, 8 candles, 9 candles, right? So 9 candles, maybe you will slot in one EMA, 9 EMA, like EMA 9. Okay, then okay, this is 1 day data already. Okay, the previous 1 day data. Okay, then maybe you can slot like 4 hour, like EMA 5. Okay, your previous half a day data, stuff like that lah. So with that, right, you go into intraday, lower time frame, you understand, okay, this is the amount that I need to look at, as in you are going to look at. Okay, because intraday is not saying that your trade cannot run out, because every reversal or every trend, right, starts from the smallest time frame. Okay, it's always the case. It's just that when you are in it, right, you are not necessarily looking out for like the bigger picture if you are just doing intraday. Also, why once you are in, you'll probably get out from the day end itself. You don't want to hold up your position because you don't know what's going to happen next day, because your data is only for this day, like for today basically, right? So indicators wise, you can use EMA, volume. Equities especially lah, you can use volume volume and EMA. I think these two won't go wrong one. Okay, then RSI, MACD, Fibo, all these, right, Fibo is more of how you're going to draw, I think. Okay, RSI, MACD, you need to understand it first, then I mean, you can make use of it. Okay, one question, what is EMA? Okay, this one, EMA, okay, sorry, I'll hang on. Xiao can throw the YouTube into the chat. Thank you. Okay, Xiong will be sharing one link for our previous webinar. Okay, we spoke about exponential moving average. All right, so EMA is basically moving average that you can use to help. It's basically a dynamic trend, dynamic support and resistance. Okay, so you can use it to pinpoint your levels. As long as price continue to stay above, it's more likely going to be that trend. Okay, basically it's like can tell you about the trend as well. Okay. Okay. Then also one thing I just want to share lah, like a lot of indicators, right? I realize is also they don't work as well when price are stuck in one area. Okay, like a range bound area. If the range, if the trading range for the equities itself is huge, right? Then okay, then maybe we will see some differences because they will still have their minor like high low higher low stuff. Okay, but if it's just a very small range where there's no trading activity kind, right? Your indicators most of the time don't really tell you very accurate data. Okay, that's just my observations lah. But yeah, So that's it lor. Okay. Oh, okay. Now let's do a poll. Now I suddenly see one question. I see one question very interesting. For workshop, will you all prefer physical class? This one is just a question because I saw the suggestion, right? So I just want to ask since everyone is here, right? So like webinar or you want seminar physical class. You all prefer physical or like online? Yeah, because like the explanation why physical better, right? You all can draw the line, then you can show me, then I can share with you, okay, how to tweak, how to make it better. But okay, I just want to say because in TA there's no right or wrong okay, always be sure of that, okay. So don't need to paise or what. That's why I say you all got any chart or anything you all draw already, unsure want to ask me, just send it to me on Telegram. Okay, that one I will still see one. Okay, yeah. So Xiong is going to throw a poll out whether you all prefer webinar. Huh? Oh, sorry. The poll is me. Hang on. Online. Wait, I wait. Wait. Let me just do a poll. Let me just create. Since now we got time, right? Then TA. I think indicator. Unless you all got question, you all still have or not? Or you all want to just go back to supply and demand? I just need to ask because that is still my bread and butter so hang on let me just give you all some stuff how do I do it? Single choice. Okay. Soon you will see one pop up okay, that one is to ask you okay, webinar, seminar, or you want launch? Okay. Question is out already. Seminar basically physical or like a course You're interested in course or not If let's say I really do a course for supply and demand, you're interested or not? This one I also want to do a poll. If I do a course like then the course is not all this stuff already, it's more in depth already. Because now I just share with you surface I tell you how I think only I never dive deep with everyone because it will really take a lot of time. Wow. Okay, thanks for all the responses Oh, nice. Okay. Okay, then with that being said, got any other questions? Have or not? Because end of the day, this is still a TA webinar. Okay, I will try my best to answer every TA related questions. Okay, I know or don't know, I will try my best I don't know, then I go and find and I let you know. Okay, okay. Thanks for the responses. I will throw one more question out first. Thank you. Thank you everyone. Today, Wednesday night, still with us. Almost 10 already, I just realized. Yeah, this one not. Okay. One more poll first. Sorry to pull you all around. Okay. Then I also just want to say for next week, right? The trading psychology portion, right? Will you all want to have charts? Because if I talk about psychology, right, I don't think there's any technically no chart involved one, like really don't have one. Maybe I can share with you is why fake out happen. I think that one I also shared quite often already, right? Like why fake out will happen in the market. There's a lot of chain of thought as well, because some might think is the instis, some might think that it's just intentional, stuff like that. But I think end of the day, right, as long as we can pinpoint the level that we don't get out, we don't get faked out, then technically I think that one we can discuss lah. It's like it's more of a discussion already lah for that. Okay. Okay, thank you for the responses. My way is okay. This one I will look into it. Okay. I will look into the latest poll. Yeah, so got any other thing? Are there wait, let me just see. Why can't you even wow. Online. No, it's actually can lah. I mean, okay, do on the only difference between this online and seminar, right? Like webinar and seminar, right? I think the only difference is because you see, there's a lot of thoughts to put into it, okay? Because firstly, right, it took me a very long time to really understand the market. That's the first thing, okay? So with that being said, right, I think the journey is not easy. But also because it's not easy, I don't want to, in a way, I come and do a course, right? Well, then people say, wow, I go your course, then can already lah, we go trade lah, we make money, But I know for a fact, trading strategy, right, work for me might not work for someone else. Okay, you might understand it, but because of some psychology aspect of it, right, and it's just the mindset lah, it might just be very different. Okay, so I don't want to in a way, right, I share my stuff, okay? Then after that, you in the market, I mean, touch wood lah. I hope everybody what okay, what lah. But anyway, I don't want in the case where you use what I share, right? Then after that, it gets some adverse reaction out of it, which I won't feel as good lah. Okay, of course I will feel good. Everyone make money lah, but of course why not, right? But I know it happens that some people might not get it after a one-to-one course as well. Okay, it happens to me as well. Okay, I share with people, then they understand or they don't understand. I don't know if they understand lah. They show me the stuff I see. Okay, maybe can. Then slowly, that's why I start to understand like the mindset and how you look at trading, right, is very different for everyone. It's really very different. Okay, so I think the suggestion very good. I got one more suggestion. Okay, I can talk about psychology, then show on chart how someone will react and how you will react, and even how Zain and Xiong will react. Okay, very good. We will do that. Okay, yeah. Are there any indicators that combine both price and volume? The only one I can think of right off my head, right, is Ichimoku. Yeah, but if in the same indicator itself, Xiong, do you know? Volume price. Wait. There's something. Oh, sorry. Last week I said the volume profile one the volume showing from the horizontal. Then after that is based on per price how much volume there is. So it's a volume profile. But I think on TradingView is under pro account only. I think. This one volume profile. Volume profile. Wait Fixed range volume profile. Okay, basically the volume profile is your volume will come out at your price. Okay, then is unless that's what you're asking lah. Otherwise, another one is Ishimoku lor. This one is a lot of other data coming in on. Got one more. I think. Wait, let me think about it. Let me think. Oh, so anyway, those that this one I don't know lah. What price volume trend I just click P then appear. You can go and try. But I have no idea what's that. Okay, anyway, those still here, right? I think this is almost the end of our webinar already. Okay, I just going to continue just talking free flow. Just talking whatever I want to talk. Yeah, but basically that's the end of today's session. Wait. I let Xiao talk a bit first.
All right, I'm back. Okay, we are reaching the promo part. So, for those who do not know, tomorrow is US holiday. Then Friday is partial trading day lah. Okay, partial trading day, trade from what time to what time? It's 10:30 opening, and then I think it's 2 a.m. is the closing. So for you guys to note that there will be no trading tomorrow. Okay, partial trading on Friday. So we'll still be in. If you got any question, please ask us. Okay, I'm jumping straight right to the promo. Right now, we still have a lot of promo. For those who do not have any accounts with us, go and open an account because there's 3 different shares up to $200. If you are not sure, go to our website under promotions. There's a whole list. Okay, so now we are introducing something called options. If you know how to use option, you can use it. Go and read up something called covered call. I've been using them. I love covered calls and of course selling of puts lah. But all these we are coming up. We have them in our poems for covered calls. So go and take a look how covered calls work. You can actually have your shares with you and then you earn premium. You know, you earn additional money on top of having your shares. And then in the case that people it's like option. But I mean, go and read it up. It's very, very interesting. Okay, you can use it gives you a lot of different ways to take profits with your current holdings and your positions lah. Okay, and then with that, let us take a look. Next we have the community page. If you're using P3, I know P3 we have quite a bit of people using lah. In terms of community wise, if you got questions and anything, just post it in. We will look forward to answer you. We have different groups. All the different groups are listed here. Okay, growth investing. We also have a new page called option trading, and we are pretty active there lah. So if you guys got questions, once again, do visit. And I've written a few market journals on Podium's website. Go to our free, not free lah, but under the events okay, maybe let me find for you guys. Okay, so I'll send in the link later. But then sorry, I was on mute. Okay, join us on Telegram. This technical analysis group. Ying and Zain is inside. So you guys got questions, please show it to them. They will answer you. You got anything? Okay. So okay, I will show you guys the market journal. I mean, I'll send it in the link lah. Okay. If you go to our Poems web, right, under education, then we have a segment called market journals. Okay. If you got time, go and read. We have very, very interesting topics there. It talks about bonds, CFD, anything. It also have the top traded counters. So I'm gonna send it in the I'll say it in the okay, so yeah. So Injie will send the link for the market journals in the chat. You guys can go and read it up. We have very interesting topic talking about options, how you use options. You know, if you it's not is it considered risky? It's a derivative lah, but you know, you need to understand before go and buy. Don't just go and all in like casino like that. No lah, nothing works like that. Okay. So go and read up. I think reading is important, and you know, having more knowledge is also important as well. So once again, the TA technical group is here. If you guys got questions, please just hit it up. I mean, Zain and Ying will be there to answer you guys on daily basis or whenever they are free. So okay, I think we got one last Q&A, but before that, you know, this account opening, for those who do not have an account, do join us because we have a promotion right now. It's giving out three different shares up to $200. But of course, terms and conditions apply. Check it out under our promotion page. I think it's quite worth the deal. Okay, so lastly, we have the survey form. Okay, so I know that this is the second last one. I think next one is very, very interesting because psychology part is gonna be probably half the trade. Okay, so feel free to feedback on this survey. You guys got questions, please let us know how you can improve. I think judging from previous feedback, I think it's quite good. Of course, we have people who want us to show them how we actually trade. So I'm showing it you guys today, but of course I'm saying I want to say this again. What I'm showing does not, you may not be applicable. So you, at the end of the day, you will still need to look at charts, change your trading strategy to accustom it to yourself, because your psychology factor is very different. The way you react to the market is different from me. Maybe I can hold as long as possible. Maybe you feel like, I'm losing so much. Maybe I need to, or it may be the other way around. Okay. So just now was just a quick example for you on how to make a quick analysis on the Amazon. Yeah, using the TA lah. So I hope that helps you guys, give you some idea. I wouldn't say to jump right off using those three. I think it's best you take a look and analyze it for a few days, and then subsequently, if it works for you, that'll be great. Okay, for those starting out TA. So okay, the forms are out. Okay, so the next is the end. So this is the summary of what we have been through. We talked about RSI today, MACD, and Fibonacci. So I hope all these you guys sort of have a rough idea. If not, you can read it up online or rewatch this to have a better understanding. I think YouTube-wise, there's a lot of different people doing all this, so it's quite a lot of content how they. And then you will realize that different traders have different ways of putting out the charts, the charting. Okay, it's not gonna, what they do may not apply to me, what I do may not apply to them. So you need to find a balance, need to sort it out, your different day, different chart, how you're gonna look, are you holding short term, long term, your trading style, are you gonna be it a week, a day, a month? So all these, you need to understand your trading behavior. So how you need to be in the market more, basically. Okay, go and take a look. So this is the summary for today. Today's session. Next is more trading psychology. We'll try to come up with content catered to you guys. So if you guys got questions, please let us know, and then we will include it in the next session. If not, we will answer any Q&A. I think Ying Jie will answer one of the Q&A. So I'll hand it over to Ying Jie. Over to you, Ying Jie.
Okay, sorry, I missed one Q&A because I saw it is can give tips for bottom fishing. Okay, I take it as is bottom and the top okay, basically both sides that you want to, when the market is running bullish, you want to catch the contrarian side, right? Bottom fishing Okay, so to be very honest, bottom fishing, right? Okay, you can find levels to bottom fish at. Okay, it's can one. That's why. Okay I mean, this one I don't use indicators okay, how I use to bottom fish, right? I don't use indicator, say real. I use supply and demand only. It's really just boxes. Okay, I give you an example. If you hear my storytelling for very long time, right? Okay, this storytelling never change one. Okay, you know that last time we have a range area that price broke away, right? So when price broke away, you know that this area here never come back. Okay, this small area we see, we just pinpoint here, but this level never come back. Okay, they broke higher but of course at this point we won't know. Okay, at this point we don't know whether what we will do. It's only subsequent that we on hindsight we know. Okay, so bottom fishing, first thing is all on hindsight. You need to take history okay, because bottom fishing is basically they're running to extremes already. It's either the top or bottom. If higher high for equities case, right, you have to pinpoint your psychological level, not yours, the market psychological level. Okay, how you can find, I think I shared before as well. You have your major range, you have a minor inside. This area here will be your next level. Do you all get it? Wait, I just draw, okay? Sorry, I use my hand, maybe it's very confusing. Let me just draw. For example, this level here is extreme high already. We look to the left, nothing. We look to right, nothing. Where we know where to go, okay? So what you need to do, right? You pinpoint this area, okay? Then you know that the highest point is they rejected here, okay? But most bottom point, okay, initially they reject here. So you find the difference between these two, you put it above, okay? So for example, this difference is 91 to 97, $7. $7 25. Okay, so your next level will be here. Okay, will always be almost the same gap one, the difference. Okay. Don't use eye power lah. You really go and count first. Don't need to be exact, but around the range. Okay. So if it's extreme at the top or bottom, right? Okay, equities are at bottom because bottom is 0 already, right? So at the top, right, all time high, right? You don't know where they will go or where they might go. Then you find this kind of psychological level. Of course, round numbers like 200, 210, 250, you know, this kind, it will still play a part. Okay, but generally, if you want, you can just use levels as well. Okay, so for bottom fishing, this is a very interesting topic. Okay, it's not a topic per se, but bottom fishing, right? This idea, right, is basically you're trying to be a contrarian in the market, right? Like when the price is coming very low, everyone is selling, you want to buy. Okay, that's not wrong, but make sure you buy companies with strong books, right? Because if they really can slam very strongly, okay, from whatever financial crisis or whatever thing, okay, you want to make sure that eventually they can recover. Okay, then you can then you bottom fish properly. I'm just talking about longer term. If you want later, I will zoom into intraday and tell you how you bottom fish. Okay, but basically the general idea is where to find your levels is the same. Alright, so initially we have this major area, price start to break, price start to form this area, price never come back anymore. Okay, then we pinpoint, okay, we know that initially was like that. Correct. Okay, this was the initial range area that they formed very long, price keep getting stuck over here, then they continue. Okay, then you see this 120, right? Probably there's a level around here last time before the COVID. Okay, so once you break here, you know that your next high is this guy. Where did they broke? They broke from this guy. So your next level is basically the next area where they never come back. Must always remember, they never come back before. Okay, if they come back before already and tested already, right, then it's not a fresh level anymore. Okay, then it won't be as strong. Then after that, you realize, okay, next level is this guy over here. Okay, this guy over here. Wait, this guy over here. Price broke. Wait. Okay, this guy over here. Price broke with this guy. Broke with this guy. Okay, so with all these levels, right, then you realize why this guy reject from this guy, but this guy is not in the chart. You understand what I mean, right? All this is based on your history. You have a very big range. Okay, you get your demand, your first demand. After that, another big range. You get second demand. Price never come back. Okay, but the problem with this area here, why I don't want to draw this guy yet, you have your high here. Okay, you have this guy already confirm with a higher high, higher low. They make a subsequent higher high, higher low. Okay, so this higher low is basically rejecting off a previous demand level first. Okay, but eventually it became a range level like this over here. Then price broke away. Okay, to be very frank, at this point, right, I don't know whether this guy will hold on. Okay, because it will never be my level like that. Okay, I won't draw like that first. So at this point, when price start to reject at this 165, okay, I cannot tell you bottom until so nice. Okay, some can, some cannot. Okay, because depends on where the levels are. Okay, it's a range, they have this demand, they reject. Okay, I won't be able to tell you to pinpoint to get in here. Okay, the closest I can get you, right, is maybe over here. Okay, but this is the same story again. Okay, you have a range, price broke down. Price broke down, what happened? After that, they fake out back into the area, right? But what you want to see to confirm is whether they can continue to hold your higher high, not higher high, hold above the level and continue creating this higher high, higher low. So the closest I can get you is here. I cannot get you at the bottom. Okay. But if you look at it before, right, then okay lah, maybe you see these previous touches, right? Yes, maybe I can get you from here, I can get you from here. Right? So it depends. Okay, but also meaning to say, this guy here won't be here already. Okay, this guy will be just taking this resistance. You get what I mean? Once they clear already, right, the level is gone. So if Apple were to come back down to this 160, right, this guy, you eventually can get it already. There's nothing there already. Then you will need to wait for the next one. Okay, so it's basically we are looking at levels that basically they call it fresh level. Okay, level that are not tapped into yet. Okay, so for example, like this one, we just draw here, then the last time data, it should probably be very close to a level that will make sense somewhere. You know, so like that. Okay, so that's how you pinpoint. But of course, you pinpoint, all this hindsight of course, hindsight I draw for you very easy to see. right? But the general idea is you want to find a level where they broke away from, price never come back, then currently price coming back. Then that's where you will be able to get the, in a way, your most supply or demand level lah. Okay, but make sure that it's a major lah. You need to be a very huge area where they keep testing, cannot break, then eventually break. Okay, then that level will have more significance compared to others. Okay, I can give you another example lah if you want. Okay, we just go like oil lah, oil. How is oil doing now? Wow, oil like that ah. Wow. Wow. Okay lah. Okay, for this case let's say we want to bottom fish. I delete everything first You all actually actually don't need lah, just like that. Okay. It's the same story, you see. Previously they were here, correct? It's still a range area, even though the range don't look ugly. At the point they are building, we don't know it's a range. It's after they are done building, then we know, right? So when they build finish, you know that price broke away higher from here, okay? They broke higher. Then after that, this is the lowest point that they form, like over here. They broke higher, then they form the lowest point. The lowest point here will become the demand. Then the demand, then eventually you basically just drag wherever you want then you will have this So if you are asking about bottom fishing and like top and bottom fishing, right, basically you need to find levels that really make a difference last time. Okay, of course here they tapped before already, so this might not be very strong. Okay, so there's two things that you need to take note. You have a zone. When price starts to come in, they tap into it basically to say that they went into it, right? If they never go beyond, safe, okay, you can still keep it. If the price go beyond, then come back up, right? Doesn't matter what they do above, this guy is gone already. Okay, you all understand this one is I touching more into the supply and demand already. Okay, so as long as they are inside, I mean it will be weaker, but fine, they are still inside. They are not out of it. Once they form out of it, right, they make a lower low, right, then probably this guy is gone already. That's why when price starts to trade down to this 60, 62, right, please take note, because we might potentially see lower price already from here. Okay, since we are just talking on oil. But then general idea, your market cycle, you see, is the same one you have high, low, higher, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low. Just keep lower, high, lower, low, then you just wait You cannot do anything wait until they form a base, then potentially whether will they flip to a higher high, higher low, higher high, higher low, then you can continue. Okay, I think that's all I have to share for today. So if you have any questions, I think Telegram you can do for me. Otherwise, drop me a text on basically Telegram Okay, drop me a text on Telegram if you have questions. Okay, otherwise, thank you for staying with us until 10. Continue to trade safe and stay safe. I'll pass it to Xiong. Thank you.
All right, so this will be the end of the webinar. Thank you guys so much. If you guys got questions, throw in the chat. We will, reply to you guys. If not, thank you for staying until so late. It's 10, 18, 12 more minutes to market open. And tomorrow there'll be no trading once again. So, and Friday, Friday it's a partial day okay? It's 10:30 to 2 a.m. for those who are not sure. So happy trading. Thank you and good night, guys. Yep. So that's
bye.
Thank you.
Good night.